But, ladies and gentlemen, I want to welcome Mr. Bob Chapman here. We all love and respect the fact that he comes out here to talk to you as military men around the world, military women around the world, and those of you that are civilians. And remember, ladies and gentlemen, the democracy will cease to exist when you take away from those who are willing to work and give to those who would not. Thomas Jefferson says it, Bob Chapman lives it, and I live it. As a former United States Marine from 1967 to 1977, I live by these rules, and I know Bob Chapman lives by these rules. I just wish the rest of you would live by these rules that are out there, and I know the listeners do, but when I say the rest of you, I mean those out here that don't listen to the show on a repetitive basis, that want to take, and you got to realize, ladies and gentlemen, there's a lot of takers out there, and there's very few of us who are givers. Today's show is dedicated to my sister Melanie, and that's spelled M-E-L-O-N-E-E. Kind of a weird spelling, but my mother chose it. My daddy loved it, and my father and my mother loved Melanie big time. She became a major in the United States Air Force. She retired from the United States Air Force and lives there in Springs, Texas. I welcome her to the show as she listens in the background. We're proud to know that she's having a good day. And to Mr. Bob Chapman, I bring Mr. Bob Chapman on because we need to know about the private payrolls that are unexpectedly falling very short as our recovery kind of lags behind. Those are private payrolls is the private people around America that own private businesses or basically laying off people left and right. Mr. Chapman, what do you think that's going to do to the economy in the United States, sir? And welcome to the show.
Well, thank you. A good question. What's been going on is that, particularly over this past year, the small and medium-sized and large businesses, but mostly small and medium-sized, which creates 75%, maybe 80% of all the jobs, they've been laying off. And the earnings of the larger corporations were up some 30% over this past year. And it's not going to be as good this year. And they really accomplished that in great part by laying people off. Well, what they forget about is who's going to buy the things that they make. And so we have terrible automobile sales and the growth of the economy from the consumer viewpoint is slow. It's up a little bit, but, it's up a little bit from dreadful figures a year ago. So the economy really is not growing. In fact, it's probably stultified at even or a little bit less. And so this unemployment is going to continue. I just saw 2 surveys which will be in Saturday's edition tomorrow, 2 days from now, in the Forecaster. And I think the figure was 92% of small business owners see no improvement for 14 to 18 months. Now, that's pretty stultifying. I guess that's the right word for it. And so there's not going to be many jobs out there. Now, in addition to that, the gross domestic product of all the goods and services, that was made up by about 72% of consumer spending. That figure's dropped to 69.5%. I predicted 3 years ago that it would drop to 64.5% eventually, because that's a long-term mean. The average price since the average percentage of GDP since the Second World War is 64.5%. Could go lower than that. But that's where we're headed. There's no recovery. In spite of the fact that there's been $23.7 trillion committed to the economy, and they increased the money and credit by about 16 or 17%. Plus, we had a stimulus package. It's not working very well. And so that's where we're at today. And quite frankly, if they don't have another stimulus package and inject more money into the economy, we're going to go into a deflationary depression over the next couple of years.
There's not a good picture painted out there, is it?
No, and it's the fault of the Federal Reserve, Wall Street, and banking in particular. They caused all this, and they knew what they were doing, and it was done deliberately. And just like the conflict in Iraq and in Afghanistan. And I know what they're thinking of, because I know they want world government. What I'd like to say, I don't know what they're thinking of, but I do know. And that is, in order to bring about world government, they get to get the people of the world financially and economically on their knees, and that's what they're trying to do. And so we should probably have in a year and a half, 2 years, we'll probably have a deflationary depression. And believe me, if you think this is bad now, on a scale of 10, this is 10. And a deflationary depression is 1.
As Colorado Al would say, on a scale of 1 to 10, this is 11. I have a question.
Yeah, could be.
I have a question from the chat room. Are gold stocks a good investment? A listener recalls Mr. Chapman saying that he himself does not own gold shares. Second question is it too risky?
Well, first of all, I recommend gold shares. The reason I don't own them, I don't want there to be any conflict of interest. Simple as that. I'd love to own them. But we have an appendage of the United States government in Washington, D.C., called the Securities Exchange Commission and the Commodity Futures Trading Corporation, run by a group of criminals. And so they have been dogging me since 1967, trying to find some way to shut me up. And they haven't found that method yet, though they tried real hard, I'll tell you. But the public has no protection from these people. They are working with the Illuminati on destroying America. And, I mean, all you have to do is look at the Madoff affair. Madoff affair, excuse me. They knew 10 years before Madoff was caught what he was doing and did nothing about it. But that's just one of thousands of instances I could give you over the past 50 years, because I was on Wall Street for 28 years with my own brokerage firm. So, to answer your question, gold and silver shares are excellent investments. Gold and silver coins and bullion, but I prefer coins, are an excellent investment. They're the only thing that I recommend, unless you got piles of money and you want some liquidity, and I do recommend Canadian and Swiss treasuries. Other than that, that's it. So, any of you want to know what stocks to buy, all you have to do is email me. That's Bob, B-O-B, at INTFORECASTER.com. Bob at intforecaster.com. What was the rest of that question?
Let's see. Are they too risky?
Not at all, because they're way underpriced. Because the stock market went up and most of the money has gone in there. And not only that, our government has been selling them short, betting that they're going to go down to try to keep them, at least temporarily, from going up. And they're doing the same thing with the price of gold and silver, but they have been very unsuccessful. Now, I'll give you an example. Now, mind you, other central banks, in all the power of the U.S. government, since June of 2000, that's 9 years ago, June of 2000, it's just over 10 years ago. This is the suppression I've got going on. Gold has gone from $250 an ounce to $1,200. Silver's gone from $350 to $20. And I'll pick one stock out. Probably the best stock, gold, silver stock in the world by my estimate. And I know all the managements, all these companies and everything.